Hello, and welcome to another episode of the Lockton Marine Podcast. Today, I am joined by Hege Midtsæter, Senior Vice President at Norwegian Hull Club, Ed Parker, Departmental Head of Special Risks at Tokio Marine Kiln, and Adam Wright, Founder, CEO, and President of Ocean Special Risks. We are here to talk about, special risks. And I think for the purpose of trying to define that, I wanted to ask you, Adam, since you've named your company, Ocean Special Risks, do you have a definition or an idea of what special risks mean?
Well, I guess if you ask 10 different people what marine special risks is, you'll probably get 11 different answers. But I can tell you what it means to us. And I can probably tell you better what it isn't. And I think it's best described as products and coverages which aren't widely available from the mainstream marine insurance market.
So it's not hull, but it could be a hull peril.
Exactly, yeah.
It's not P&I, but it could be a liability peril.
Yeah, it's the things that don't fit in a box that fall between the cracks.
Would you go along with that definition?
Yeah, I think, as you say, people have different definitions of this. For us, it's very much sort of whatever does not fit in the box. That's our definition, and that is very wide and very a woolen concept, so to speak. But risks that are not standardized and fit other purposes than your standard hull machinery P&I war cover.
Is that how you, when your kids ask you what you do all day, is that Mommy puts things that doesn't fit in boxes in other boxes?
Yeah, no, they think I build ships, so it's a very different
Let them
different
believe
concept.
it for as long as they can.
And record podcasts.
Yes. Ed, do you have a definition?
Do you know, I did have someone say to me once that it's the worst defined term in insurance. What does special risks mean? Which, from one point, I would agree with. I think it goes to both points here that it's as narrow or as wide as you want it to be. To me, it's much more a concept than a specific thing, and then that concept can be applied to whatever might be in front, and it's something that's absolutely not there to compete with coverages. That in the marine market have been around literally for hundreds of years. It's there to complement or try to work alongside, whether it's a revenue protection as opposed to a physical damage. You mentioned a hull loss could be one thing, but there could be 10 different things associated with that. So, I think it's something that does fit outside of the ordinary, but I think what is paramount to it, it's quite a it normally involves quite a bespoke solution, where I'm not going to say we're more thoughtful underwriters than anywhere else. That certainly wouldn't be true, but it sometimes just takes a little bit more in-depth analysis to work out what your client and what your broker is trying to achieve, to come up with something that is we can call it a special risk, unique risk, anything that sort of fits into that bucket. Which you're not going to probably package up and sell 10,000 of them a year. However, the favour that you can carry with clients, brokers, and others in the industry, and the power that it can give is not something that should be underestimated.
So I quite like the idea that it's not a product, it's a concept, and the fact that it's not something that you sell to everyone, but it can make a real difference to those who do buy into it. Do we have any examples of where that concept has created real value for the assured?
Yeah, I think there's countless examples, and I think it just speaks to the point that it's not something that you can sort of standardise as such. But I think the revenue protection point that Ed just touched on, I think that whatever business you're running, whether it's an insurance broker or a shipping company, the money is what keeps people awake at night, right? That's the life of your business, and I think perhaps the conventional sort of revenue protection offering in the marine market, whilst it's a tried and tested product, doesn't maybe go as far as some would like. It can be an enabler for deals, either for contracts or for companies that are scaling up. So we've worked with quite a few smaller enterprises that are looking to grow their businesses and probably taking on bigger, their biggest contracts. And they might not have the resources, the balance sheet to absorb the risk of a failure or a problem with that contract. So I think I look at it as problem solving. I think that's something we've touched on. And enabling businesses to go out and do things that they might otherwise not be able to do, to make investments, to take on that new project.
Hege?
Yeah, I think we've one of the things we see quite a lot of are these different contractual exposures, and that can be anything in a contract, right? You can have cancellation provisions and you want that balance sheet protection, either for investment reasons or something else. You have daily penalties in the contract that you want to ensure, because that if something happens, you don't only lose the downside is more than just losing your daily hire, which for some companies can be very painful. One example that we saw a few years ago, which is interesting, is a client had entered into a contract with a purchase option for a vessel that was being built at the time. And that was very lucrative for them. So they wanted to protect against that vessel becoming a total loss during the build, which is a fairly standard builder's risk peril, but a different exposure. And I think that's what we see very often, is that it's not necessarily very complicated, because the perils are known to us. It's just different exposures in different settings.
And
to my mind, and I think insurance as an industry is really bad and doesn't give ourselves enough credit for the one word that Adam said that is key, which is enabling. Now that can be from the single vessel owner trying to double his fleet, to household name investment banks that we've seen and worked with lending on multi-billion-dollar projects who are worried about debt service provision. You can work with, examples we've had in the past, household name logistic firms who are tendering for really big projects, who they know their line of business better than anyone. However, the CFO doesn't want to sign off on a fine or liquidated damage if something goes wrong for millions upon millions. It takes some really brave people sometimes to do that, and people don't want to carry that. And I think what we have the potential for in insurance is at least giving people the option to consider some form of risk transfer where they're thinking through it. And I also think that when you're able and have the ability to work with people, clients of that mindset, just by thinking things through like that, they're already sort of propelling themselves above the benchmark of that industry, just by thinking slightly different and looking what might be possible. And also these days, people do have to think, with E&O insurances out there, and what can sometimes be, levelled accusations against companies when things go wrong. There's a massive amount of help that we can do in this space across a very, very wide spectrum.
And I think that whole idea of someone, or with either assistance or with their own volition, identify a risk in a contract or a deal or a trade, and then they have to make that decision: do I want to absorb this risk, or do I want to transfer it to someone else? Then our ability to actually price that risk and tell them that this is indeed insurable, but it comes at a price, will allow them to make a much more informed decision whether this is something we're comfortable absorbing or if it's something that we're comfortable transferring. And equally, as you say, if you're in a process where you're actually either seeking financing or you're seeking board approval or whatever, if you have that holistic risk view that says these are the gaps, these are the exposures, and this is the cost of protecting us from them, it's a really, really strong tool. And it's something that we don't do enough of, but that we're here to raise awareness.
Yeah, I think that's half the battle, probably more than half the battle. Certainly my experience in trying to do this stuff is it's not I don't view it as a kind of traditional underwriting sort of proposition. It's not just sort of risk selecting your way to a portfolio. You have to go out and find problems to solve because each one is unique. Each one has its own set of nuances that need to be addressed. So that's something we've talked about is how do we address that? How do we take what we've got to the market when it's not a set of wordings, coverages, products?
Yeah, we've seen examples in the past. If you look at that contractual exposure side of it, where if we've been involved early enough in the process before the contracts are signed, the clients are actually able to either take the cost of the insurance and push it over to their counterparts or negotiate it out of their contracts, leaving us both in a better position, so to speak.
No one makes any money on that. There's no brokerage on a contractual provision.
We're about solving problems. So,
but you gain your client's trust and faith.
This is true.
Exactly.
However, all I would say, just because someone comes along later in the sort of project timetable or risk framework doesn't mean that it's a bad risk per se, or the client isn't thinking properly. Sometimes these things just aren't known. The type of coverage is available. People who are putting the projects, the financing, the wraps, everything around that might just not be aware of it. And sometimes as I'm sure everyone here has seen some wonderful contracts that genuinely we can't help with if we're you're trying to do the best by your client as the broker would advise. There's nothing there for us to cover because it's so good. To other ones that unfortunately can be so detrimental to a client, there's very it can be quite hard to help in any way. But what we try to do is work with everyone, advise, and you can learn that maybe the next time when something comes in, there's a little bit more that we can do, and maybe you're having the conversation slightly earlier because it does make for probably a more insightful and potentially slightly easier conversation.
To pick up on that point, so if a ship owner brings you a contract which is very favourable and there's nothing much there to do, that means that there's someone on the other side with an equally unfavourable contract, whether that's a charterer or a contractor or whoever it may be, which brings me to my next question. So who is this for? Because we are all in and around the marine special risk space, which circles around marine perils, but it doesn't necessarily mean that it has to be for ship owners. And we mentioned mortgagees, we mentioned shipbuilders, others.
Yeah, well, certainly from my perspective, our sort of range is quite broad in terms of what we're looking at in the marine sphere. It's all of those things: conventional shipping, charterers and traders, financing institutions, shipyards, ports and terminals, logistics companies. Stuff that's anything that's involved in the movement of goods, really. Offshore contractors, it's quite a space where there's lots of risk, multiple parties in projects that are pretty risky stuff, evolving technologies, and the landscape's kind of changing all the time. We've got, I think we talked yesterday about sort of what we could call emerging risks, and we could probably have that discussion every week at the moment in terms of technological developments in shipping, geopolitical issues, regulatory issues. So there's no shortage of a client base out there. Certainly from our perspective.
Yeah, I think it goes back to anything or anyone involved in the movement of goods or trade, which casts the net extremely wide. And I think where it's got wider, where more of the special risks has come in and the potential for it to come in recent years, is much more around the protection of revenue associated with assets as opposed to the assets themselves. So I think there's a lot more sort of contingent type risks where you've got your cargo on a vessel but you don't own the vessel. If something happens to the vessel, you could be at a loss. You're a trader that moves a bulk cargo through one particular port that you might pay a levy on, but something happens at that port, that's not your port, but everything associated with that can impact your revenue. And I think we see more people focused in on that certainly in the recent, maybe certainly recent 3, 4, 5 years, where you talk about, you know, turbulent times. I think unfortunately the world is in a, you know, it is in a spot at the moment where, you know, there seems to be something different that comes along, whether that's a geopolitical, marine, a financial type challenge. And I think all those points go to promoting some of this and just getting people thinking around, you know, what happens if the Suez is blocked. Well, all that could happen to the Panama Canal that we put stuff through. You know, you don't ship stuff into, you know, like in Baltimore, but what would happen if there was another waterway that we were using that as a bridge and something similar happens? And I think that just gets people thinking a little bit more and coming and talking about it, at which point, you know, we can help promote and advise and give clients some coverage around some of that.
Yeah, and I think even if you go back 5 years to 2019, there would have been an availability of coverage for pandemic risks. I just think very, very few people bought it. And then obviously the pandemic did happen. and now you would find it very difficult to find coverage. But equally, it's just an illustration of the fact that we have a lot of real life examples of non-insurable or traditionally non-insurable risk actually causing an impact to people. On the subject of pandemic risk, it's one of my pet peeves, the fact that there was a willingness to do something about it when we knew very little. Now that we know more, I think we have a duty as an industry to apply that knowledge to actually come up with some solutions. We have far more experience, data with what happens to marine logistics in case of a pandemic than we did. And I do want to challenge the market to actually go look at whether we can come up with some solutions.
Yeah, I think, well, it's, I mean, the reasons why these sort of blanket exclusions kind of come in are sort of well known. I, like you know, it's my job to be sort of open-minded and look at these sorts of challenges. There are, I do think that there maybe are some things that probably just too difficult, or you couldn't for the market to respond to as a whole. But maybe there are instances where you could take some of those particular risks and say, well, okay, as long as we can, it's about sort of being able to adequately assess, quantify and mitigate where possible, rather than just having, you know, opening up that sort of buying back those blanket exclusions. But data is a key part of that, and I think that's where we sort of, you know, we there's lots of it around, right? So there's we're constantly bombarded with it. I think in our space, perhaps the challenge is there's the data on uninsured losses. You know, you don't know what you don't know. So I think there's lots of stuff that we can, you know, pick data from, but what do we do with that information?
And I think it takes less time now than it did before to gather that data and to learn more, as you say. I mean, from the introduction of the cyber exclusion in 2003, it took 12 years before the first product on a buyback was out there, right? It's likely that it won't take as long this time around for some sort of solution to be in the market. What that will look like is difficult to say, because pandemics is sort of still an unknown, so to speak. It's difficult to measure the potential exposure, maybe not for hull, maybe not for loss of hire, but in the market as a whole. And we very much depend on each other. We depend on reinsurers. We depend on all the capital that's out there to make the market work. So it's difficult to say what that solution would look like, but it's likely that it'll take less than 12 years before a solution is out there.
We're using the data in for that or other perils to make this a more future-proof area of our industry is, I suppose, important.
Fundamental. I mean, we can't change the future. Certainly, it would be great if we could, but we certainly can't be blind to it. And it is, what can you try and, you know, glean from that and develop going forward. And I think where you look at some of the data sets that are out there, that helps speed up some of the work we can do and actually, as I say, insurers going out with potential solutions to problems that people might not even know exist at the time, but we can use that information and we can see what the future might actually look for. So I think that's quite a big misconception around underwriting, that when we write a risk today, we're using information that we have today, but we're pricing for the risk of the future, what we think might be happening in the policy period horizon. So anything that we can use, whether that's historical data or how that could be extrapolated forward, only gives us more power. And if we've got more power to analyse the things, that's only going to benefit our clients, whether that's wider coverage in terms of better rates, wider perils, or things that we might not even know are possible today. But by having the access to the data, and also having the conversations with what clients are worried about, that sort of old phrase, what keeps you awake at night, there's a hell of a lot of power from so many, going back to the earlier conversation around how many stakeholders there can be in one individual project. There's so much that can be taken.
I also don't think that the insurance market can do all of the heavy lifting. I think we, particularly in the special risks space, I think there's lots of work done on product development in all lines of business, but it's that they're most when they're being developed, they become mainstream, right? They cease to be special when it's mainstream. I think with the sort of stuff we're talking about, I don't think we can just sort of sit here and say, well, okay, let's come up with a product for pandemic and hope that we can sell some of those at a reasonable set of pricing and conditions. I think we do need that input from the various stakeholders in all of these activities, because otherwise we might just be coming up with solutions that aren't fit for purpose.
So how do we see the state of the special risks market at this point in time? As we've just mentioned, we've been through a 5-year period where there's been no shortage of insurance needs, because there have been real life examples of where there are serious uninsured losses. Yet it feels like, because we've also been through a hard market cycle in what we can call core products, and that's where most of the markets, both brokers and underwriters' attention has gone in recent years. Do we see that changing?
Yeah, well, I think that's part of the cyclical nature of our business. We will see capital come in, capital leave, and the pricing impact. From my perspective, I think actually it would be a measure of success if there were more of us doing this. Others in the room might disagree with that sentiment, but to me, it can't just start and end with a few of us sitting around the table. So if carriers are becoming more open-minded to this stuff, then all the better. But I think there's going to be limitations on that, particularly in the Lloyd's market. We're sitting here with Ed, who's underwrites for a Lloyd's syndicate. I think he's probably an exception in terms of the number of risk codes he's able to utilise. I think most marine underwriters, once you go to them with something that's outside of the usual marine risk codes, really struggle to kind of allocate capital against those risks, and particularly if they're one-offs, it's just more hassle than it's worth sometimes. That's just my view. I'm fortunate we've got sort of open-minded carriers sitting behind us that are able to think more broadly than that, but I think that is a challenge. So there will be some limitations on how far capital can be deployed to special risks.
How long is the queue to come see you these days?
I'm not sure what to say to that. we still have an active following. However, like with anything, it's trying to make people aware of it. And I think, as with human nature, isn't it? If there's only one person that does that type of thing, a client goes to them and asks for terms on a special risk, and they don't have anything to compare it to, it can be really difficult, even if the broker's on side and say, no, this is really good coverage, everything's right, to help just manage the expectations of things that owners, a rate for a loss of revenue on a vessel is going to be very different to a physical damage rate. But if in your mindset you're only used to a physical damage rate, you might need some convincing to pay what could be a multiple of that. So where you have, another option that you can go to, and you can show someone and go, here's two. You might not like either, but maybe they don't look so silly now. You have to have a market. You have to have a critical mass to actually build a market. And we're talking around here about, individual risks where there should be a bit more ability to sell them to people. And you can only do that by creating a market. Now, I don't know, people will always concentrate on the main lines of insurance. That's where the bulk of the money is. However, I certainly think as capital has come into insurance, and you can see the growth of people looking for the next generation of insurances. What cyber, you mentioned 2003. If we had this conversation 30 years ago, we wouldn't have considered it. And now look how important it is to the insurance market and to underwriters, brokers, and buyers of that product, that we don't quite know what that is. And I think there's so much knowledge on the subject that we can use to help create that. It might not be big as property cat, but you can help just develop it into a market. And look, the way insurance has changed, we can talk through parametric, ILS, things like that. Maybe the way the products are actually sold or packaged look slightly different. And also, the amount of times that we can talk about the unique nature and knowledge of the underwriters, of the clients, that actually one of the biggest challenges we often face is people going, there isn't enough capacity in the market to do this. That sort of follow capacity that we see deployed throughout other areas of insurance these days. Why can't that be used on some of this, where you have, that traditional insurance type syndication where you have a respected lead and you know that they're a good lead and you want to try and follow that. You don't want to employ a whole team of doing that. So you can build up a market like that.
I think it's interesting. It's always been a saying that anything can be insured in Lloyd's, right? Go into Lloyd's with a risk, whatever kind you come up with, a solution at some price. Maybe that has changed a little bit with more systems, more compliance, more. You need to put everything into a box to make it fit.
Yeah, all for good reason. I think you can see the logic there, or how we've arrived at this point. But then, sometimes you end up with the unintended consequences that you can't. There's certain things you can't do.
I think it also goes back to that point of trying to build a book of business. It can be quite hard to write a risk as a one-off, and get a client to give you an order where you might have priced it as a one-off, that if this goes wrong, fine, I'm happy with that premium I've got for it. We're actually developing that as part of your own book, as part of a wider, marine, wherever that might sit, as part of a wider company portfolio. I think it's it's one of the challenges we face of trying to, you get a critical mass of business coming in to make it a viable book, that we've absolutely got to be there for our clients when losses happen, but to make sure they're not so bad that it just gets to the point where either individually or higher up organisations just what is the benefit of us doing this, which is a real shame when you are trying to develop markets. I think it's something, and looking around this table is really important, where the brokers management have the buy-in, and they see when you're trying to create and develop markets, that's seen as an investment, not an expense, and it's not a sort of a one. Something's happened, oh my God, we need to close that down. We're fortunate that we've been doing it 30 plus years, and it's really well understood, and I know how long you've been involved in it, and it's great, and there must be real hope when new entrants are coming into it that something must be going right.
So we're all lifers in a sense, and the level of
scars.
The level of bias in this room is enormous, right? But I do think that if we look ahead 5, 10, 15 years, there is an obvious threat to the insurance industry, or an opportunity, however you choose to look at it, from digitalization, right? The way we transact business, the frictional cost of doing what we're doing. are very high to the client's detriment, and that will have to change at some point. But I do feel that in certain ways, what we're talking about here, which will always, because no matter how good the data is, it's never going to be sufficient for the computer to replace the human element. The human element in one-offs, in bespoke, in design, insurance design, will always have a very meaningful place. So to me, I think hopefully the reason why we're seeing more interest in this at the moment is not because people are desperate for profit and they are looking to diversify, but because it is hopefully a more future-proof area of insurance.
Yeah, definitely. I might have to do this for another 30 years, so I hope that I'm not replaced by a robot too soon.
Just had to show off that he's younger.
No, it's a really good point you make, and I think actually from the sort of working at home as a result of COVID, the sort of digitalisation and the efficiency of the market has come on. What would have taken years and years and years was happening in months where, like I say, I'm from a Lloyd's background. Why should someone walk around with a premium endorsement to go and see 10 markets when you can just put it online and everyone goes in? However, obviously, the more data you have, maybe you can go to, Hull as an example, where massive data sets that it can be started more automated. You take life insurance, you take motor insurance. It isn't, the underwriters per se on that would be actuaries because it's massive data sets. Where there is more judgment and maybe more specialist expertise, and not from just one person, that could be multiple people. I think there's always going to be a space for that, and that it gets really quite unique. Then it gets very, very difficult to try, and you can utilise the models, but someone has to bring all that together. Which is probably more likely to be the human, and also the conversations you have to have with the other side via the broker to get their take on it.
Well, I think we can replace brokers with robots.
Yeah, well, you know the infinite monkey theorem, right? That an infinite number of monkeys with an infinite number of typewriters will eventually type the complete works of Shakespeare. I think before they type the complete works of Shakespeare, they will type the Nordic plan.
With the latest version.
The latest one, sure. Yeah, anyone can do the latest version. Any parting thoughts, Hege?
I think sort of finishing comment on what the world will look like. I think that's impossible to say for any of us because things move quicker now than they have ever done. But we're left with that concept that's always been at the core of it to some extent, which is how can you add benefit to the business? Where can you find that added benefit, for the lack of a better term? And special risks, the way we see it, as you say, we're slightly biased in this room, but the way we see it and what I think will still be there 15 years down the line is finding solutions to those problems in some shape or form. So I think will still be very valid, hopefully, in 15 years' time.
Thank you.
Look, I think it's it has been quite a turbulent few years, and I think that's certainly help promote things that we can do to help cover things for clients. As I say, it's really important. I don't think we try to compete, but complement with types of insurance that have been around for a very, very long time. I think our challenge comes with trying to promote and just get knowledge out there of what is possible at the right time in people's thinking processes. But as we have seen the market expand, whether that's been through existing players do more of it, new people come in, different viewpoints, different mindsets, it all helps to create a much more important and just thoughtful market that you've only got to think as being a good thing, all alongside being able to utilise other developments such as things as data or other forms of capacity.
Yeah, I think I'd echo what Ed's just said. I mean, what I'm sort of finding quite refreshing as a formerly sort of frustrated broker in terms of trying to solve these problems is that actually I'm encouraged by the opportunity that's out there for what we're doing, and also the level of enthusiasm and collaboration. The fact that the four of us are sitting around the table, it's heavily biased towards this being a positive thing, but that's makes our industry enjoyable is this exchange of ideas and trying to push the boundaries a bit, rather than just sort of saying, well, everything kind of works pretty well as it is and prices go up and come down, but actually there's a lot more we can do.
Hege, Ed, Adam, it's been a pleasure spending this half hour in your company. I hope to you, the listener, that you feel the same. The Lockton Marine Podcast will be back soon. Goodbye.